Picture the first light of morning sweeping across the United States. Alarms buzz, coffee pots hiss, and millions of sleepy fingers reach for glowing phones. A heartbeat later, the country freezes. Mortgage balances, $0. Credit card statements, $0. Student loans, car loans, medical bills. Every account reads paid in full. News anchors cut into regular programming. Voices unsteady. An unprecedented financial event has occurred, they announce. Social feeds, normally stuffed with memes and late-night arguments, overflow with screenshots showing $0 balances. Economists scramble on live television, offering half-formed theories. Was it a secret government action? A colossal banking glitch? Something stranger, beyond science? Across kitchens and cafes, a single thought pulses: we are free. Generations who carried the weight of debt suddenly stand unshackled. The relief is physical, almost dizzying. The streets feel electric, as if a silent storm has passed and left a charge in the air. In Chicago, a rideshare driver who once worked double shifts to keep up with student loans cancels every ride and walks home grinning, finally able to sleep. In Atlanta, a young mother clutches a letter from her credit union, confirming that her mortgage balance is $0 remaining. Tears streaking down her face. Families burst into spontaneous celebration. Children watch their parents laugh and dance in living room. Long postponed vacations are booked on a whim. A retired firefighter who delayed travel for years loads his truck and heads west before breakfast. Small business owners once drowning in payments begin sketching expansion plans on napkin. Teachers who postponed retirement call travel agents instead of financial advisors. Banks, meanwhile, are in chaos. Branch managers field endless calls as systems show zero balance loans across every account. Traders on Wall Street watch in disbelief as major lending institutions wobble. Interest income, the foundation of modern banking, has evaporated overnight. Government offices scramble to understand the implications. Without monthly interest payments, projected tax revenues shrink. Economists warn of sudden inflation as households newly flush with cash rush to spend. Housing market seize as mortgage records display zero balances from coast to coast. Yet for ordinary Americans, morning feels miraculous. After decades defined by credit scores and repayment schedules, life itself seems to open like a blank page. Neighbors who once avoided eye contact now hug in the street. Strangers share free coffee in crowded cafes. Couples whisper about long-delayed dreams. College, new businesses, cross-country moves, finally within reach. For a few golden hours, the impossible has become reality. The country stands breathless, celebrating freedom, while an uneasy question lingers at the edge of every conversation. How long can a miracle like this truly last? By late afternoon, the first thrill of freedom gives way to something heavy. Banks keep their doors open long past closing, but the lines no longer move. Tellers explain again and again that every personal loan, every credit account, every mortgage truly shows $0 owed. With no interest coming in, lending stopped. Businesses that rely on revolving credit, restaurants, trucking companies, small manufacturers, cannot borrow to buy supplies or pay employees. Some shut their doors before nightfall. The stock market trembled. Investors dump shares of major banks, and retirement funds shrink by billions in a single trading session. International partners watch nervously. The United States dollar, once the anchor of global trade, begins to slide as foreign governments question the stability of a nation whose private debt has simply vanished. Currency markets reel while world leaders call emergency meetings, demanding answers no economist can give. Ordinary Americans start to feel the cracks. Grocery shelves thin as shipping companies struggle without short-term loans. Car dealerships cancel deliveries because financing no longer exists. Credit cards, once a safety net for emergencies, have no meaning when credit itself has evaporated. People with perfect new freedom now wonder how to rent apartments, buy homes, or pay medical bills without a functioning lending system. Politicians scramble for solutions. Some propose a national credit authority, a government-backed bank to keep commerce alive. Others call for a return to local barter and community currencies. Meanwhile, rumors spread, whispers of foreign sabotage, of secret technology, of divine intervention. With no central source of truth, conspiracy theories travel faster than fat. Yet amid the confusion, unexpected beauty emerges. Neighborhood meetings bloom in school gyms and church basements. Strangers trade vegetables, tools, and skills. Families linger on porches long after sunset, talking instead of scrolling. Children who once watched parents work endless overtime now see them home for dinner every night. Communities begin to remember how to live without the constant pressure of bills and balances. Weeks pass. The nation settles into a fragile new rhythm. Some towns create local credits tied to goods and services rather than debt. Others adopt simple trade systems, proving that cooperation can replace interest rates when survival demands it. For many, life feels poorer in convenience, but richer in connection. No one ever discovers what erased the debts. Was it a hack, a cosmic event, or something beyond human understanding? The mystery remains, but its lesson is clear. Debt was never just numbers on a screen. It was a force shaping choices, relationships, and dreams. With that force suddenly gone, America is forced to ask itself a deeper question. What truly holds a society together when the weight of owing has disappeared, and when freedom itself carries a price no one can measure?